It's been over a year since I released my first video related to tips for beginner investors. I think it kind of got lost in the sauce. I have over 110 videos, and I think I should rehash this video with a few new pointers. I've been getting a lot of comments asking the same basic questions, and I think I should make a brief video putting all these new investors at ease. I'll be quickly spewing off a bunch of tips and some of my opinions. Most of them will relate it to any investor, but some are Canadian specific. So for my folks down south, please bear with me. First up, invest now. Start investing now. Don't wait until you have money to invest. Keep in mind, the returns when you invest in the stock market are long-term. Even $500 or $1,000, any amount is good to start. And hopefully, the compounding effect of years upon years of investing will yield a massive result. I started with just $1,200 in 2010. This next point might seem contradictory to what I just said, but don't start investing until you've paid off all your credit card debt first. A lot of credit cards have 18, 19, or 20% interest. Some of the best ones I've seen are 12% per year, but that is pretty rare. You will find it very difficult to make at least 18% a year when you invest in the stock market. You might be worse off by investing versus paying off your credit card. So my personal advice, this is not written down anywhere, this is just off the top of my head. Pay off your credit card first and then start investing. This also might seem contradictory to my very first point, but if you need the funds within 1 year, if you need the money to buy a house or you need to pay someone back, don't invest in the stock market. The stock market, is a long-term play. If you need the money within 1 year, there's not enough time for the market to recover if there's a worldwide virus that shuts down the economy for 1 year. So the stock market, I do think it's a long-term play. Some people say 3 years or more, but for me, just for beginners, if you need the money within 1 year, don't invest. If you think you might need the money for 2 years, I think it'll be fine to dabble in the stock market. Canadians, always invest in your tax-free or tax-sheltered accounts first. Every Canadian above 18 has access to an RRSP or a TFSA. In my opinion, the tax-free savings account is the best investment vehicle, so always max that out first and then invest in your RRSP. Keep in mind, tax-free savings account, this is tax-free forever no matter what you do. RRSP is not tax-free, it's tax-deferred. You will save tax now, but you will pay tax when you withdraw in the future. Tax will eat away at your gains, so why not legally avoid it? Invest frequently. Why not invest monthly or every 2 or 3 months if you can? Try to save maybe 5 or 10% of your paycheck if possible and invest that in the stock market. Don't let it just sit in your bank account. A lot of people ask me, which stocks do I pick? But why pick stocks when you can let the experts or professionals pick for you? Long story short, ETFs are giant funds where experts pick stocks for you, usually a diversified group of stocks. I've made a bunch of videos related to ETFs and which ones I would recommend investing in, so I'll leave links for them so you can go back and watch. Investing in the stock market is not gambling. I do get pretty frustrated when people say that. With some basic research, understanding, and background knowledge, hopefully you can learn enough to grow a small portfolio into a giant retirement fund. If a stock drops, don't panic. The volatility, the ups and downs of the market, it's all part of the cycle. It's all part of investing in the stock market. If a stock drops, why not buy more? You bought a stock yesterday and it just went on sale today. So if you have the funds, if you have the ability, why not just load up more? Penny stocks are sometimes too good to be true. You might lose more money than you'll make with penny stocks. Chances are you might not ever pick a winner. Don't try to time the market. A lot of people ask me if now is a good time to invest. To be honest, my crystal ball is not working, so I don't know. But if you think the market is overvalued right now, instead of investing 100% of your cash, why not put 20% in now, and then 1 month, put another 20%, and then maybe in 2 or 3 months, put another 20%. You won't know it's the bottom of the market until it's already passed. So why not take advantage of the term, I guess it's called dollar cost averaging, and put a little bit in so you can take advantage of increasing or decreasing prices. If you're putting your money into high interest savings account or GICs, you're not investing. You're parking your cash. Those are not investments, you're parking your money. If you're putting your money into 1% high interest savings account or 2% savings accounts, that's not investing. At most, you're barely covering inflation. After tax, you might actually be losing money. You might be losing money due to the inflationary costs. So if you want to consider it investing, you have to be at least covering inflation. Otherwise, your money is just sitting there. So for everyone who has those high interest savings accounts, I consider those just exactly what they are, savings account, not investment vehicles. Growth stocks generally outperform dividend-paying stocks over the long term, but there's the mental part, the mental game of getting cash dividends every month or every quarter. It feels good. So over the long term, you might look at your stock portfolio and be like, yeah, I have unrealized gains of 100,000, but I haven't actually received any benefit from it. With dividend-paying stocks, you might only be up 90,000, but over, let's say 10 years, you'd have been receiving quarterly cash dividends that you can take out and do whatever you want with it. Personally, I recommend you always reinvest your gains, reinvest your dividends to grow your portfolio. Lastly, unrealized gains are not your gains. But what do I mean by this? Maybe I didn't word that correctly. Unrealized gains, unrealized income is not yours. It's not yours until you sell it. An example, if you buy Apple stock at $100 and it goes up to $200, you have an unrealized gain. But until you sell it, you didn't make $100. So I don't want to hear anyone saying, let's say they made, I think I had a friend who made $400,000 from GameStop, but he didn't sell. So the next day, he lost that $400. But in reality, it was an unrealized gain, unrealized loss. He didn't make anything. That money is not yours until you sell it, until you sell the shares. Don't count your money until it's in your pocket. So if you have an unrealized gain, it's not yours. Don't consider yourself rich until you sell it. You have to keep in mind, if you're still invested, you can lose it all. That, let's say Apple, it went up to 200 and it goes down to 0. You can lose it all. Investing in the stock market, don't invest more than you can lose. I'm obviously exaggerating here. Chances are you won't lose it all, but don't count your money until it's yours. If you've not invested in a tax-free savings account or an RRSP, let's say you have $200 of gains and you sell, that $200 is not yours because you might have to pay tax on it. So don't count your money until it's in your bank account. That's it for this video, a quick one spewing out 13 or 14 points aimed at beginners. I've been trying to wait for CloudMD and MindMed to come out with their Q4 2020 results so I can do a review and review their financials and recommend buying or selling the stock. But it's been pretty frustrating. It's almost Q1 2021 and they still haven't released their results. I've been kind of pushing back other videos waiting for them, so hopefully I can release some reviews of stock financials. If you want me to review a company, if you want me to review some financials that have come out recently, please leave a recommendation and hopefully I can get to it. But next on my list, I know I've been saying this for so long, CloudMD, their Q4 or their 2020 annual results, and MindMed. So thanks for watching and tune into those ones if they ever come out.